But let's try and understand what's the market construct like ahead of the budget on Tuesday. Who better than Hiren Ved from Alchemy joining in right now in the studios to talk about exactly that. Hiren, hi, morning. Every
morning.
budget there is the chatter about anything on capital gains tax and the market is just waiting with bated breath. But do you think that's going to be a far cry?
Yeah, I mean, I don't think that they should tinker around or they will tinker around with capital gains. I mean, you never know. But, why tinker around with something that's working so well, right? I mean, the government has got fantastic revenues from STT, more than doubled of last year. And incrementally increasing taxes is not going to be, it's not going to move the needle from a tax revenue perspective. So while spoil the sentiment. So my sense is, I don't think that anything is going to happen there.
Yeah, no, that's a fair point. Why kind of meant something which is not broken per se, right? But what seems to be broken is the mandate that the government got this time around, right? Would that mean there could be a bit more populist measures that might come in? Something to spur consumption, for instance, maybe a personal taxation tweak or something else that might just spur the rural consumption a bit?
So I think, yes, there is this overwhelming feeling that because of the way the mandate has turned out, will this government be more populist? Now, I think there are two ways to look at it, right? I mean, if you look at how the government has behaved post-elections, right? No change in the top 5 ministries, right? Even the chief of the BJP remains the same, right? So I think that the message that they wanted to give out is that nothing has changed from our perspective, right? And I think if you look at the last several budgets of this government, they are fiscally conservative. They don't like any giveaways in a big way. Having said that, this year, because you have a little bit of cushion, both about 100,000, 1 trillion from the extra RBI dividend and maybe about a half a trillion in terms of better revenue than what was forecast. You do have some leeway. So, I'm sure that there will be a little bit more for the farmers. There could be some tax concessions at the lower end, but I don't think it's going to change the construct of the budget. The construct of their budget has been do Capex, spend on infrastructure, focus on manufacturing, make in India, more defense production in India. And I don't think any of that is going to change, frankly.
Yeah, but as you're saying, that has been the context of the government and the focus area, and that's been the focus area for your portfolio as well. I see a lot of overweight on industrials and manufacturing, etc. Is there no temptation to book profits or some worry that perhaps we are baking in all the positives already, which might be coming over the course of next 3 to 5 years?
Look, I think these cycles generally are not very short. They last 7 to 10 years, right? And obviously in a bull market, you will see sector and stock rotation happen. So it's not that cap goods and manufacturing can keep going up. So they go up, they'll correct, they'll go sideways while something else will do well, right? So markets always wants a new narrative. The new narrative right now is, there'll be more social spending, let's buy FMCG and consumer stocks. You saw the kind of rally that happened in the large cap tech. When you know that, okay, it's slightly better, but it's something great, right?
But the stocks move the way they do. Yeah.
So I think bull markets always have these narratives. There is always sector rotation, but I don't think that the leadership that we've seen in power, cap goods, defense, railways, blah, 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 all of that the so-called cyclical sectors is going to go away anytime soon. I don't think so. They may go sideways, they may correct. That's okay. That's part of the healthy trend. But it's a long-term trend and I don't see that reversing. frankly.
But Hiren, up until now, the capex has been government-led.
Yeah.
It's the government which is spending. All the sectors that we've talked about, all government-linked. What can the government do in this budget to push private capex coming back?
I think that they've already done what they had to do. They have rolled out PLI schemes in several sectors. Maybe they can expand that a little bit. But I think that, as capacity utilization now reaches, I think 75% plus, you will see private capex happening. I mean, we are seeing that in renewables. We're seeing that, chemical and pharma companies are doing capex, and we were looking at the numbers, and the fastest capex have been done by some of those companies. So I think that the capex will happen, but you're right that it's been front loaded by the government. My sense is that they'll have to continue to spend on capex.
Okay, so that capex push will continue most likely. But the last time we spoke, you were also quite positive about real estate.
Yeah.
Do you see peaking out of that cycle? And also when you said that defense, etc., is cyclical, where are we in that cycle? Are we past the peak, close to the peak? Where would you rate that?
You asked this interesting question on defense. And the analogy that I like to draw is the last scene of Sholay, right? Where Hema Malini is supposed to dance on a shred of glass, right?
Yeah.
And Gabbar says that जब तक पैरों में जान है तब तक उसमें
Naach basanti naach, or
right?
something like that. Yeah.
So on defense, till जब तक order आएंगे तब तक stock चलेंगे. जिस दिन order
Love
बंद
the
हो गए,
analogy
stock
there.
चलेंगे. Okay. So, but having said that, jokes apart, I think, I mean, there is this overwhelming feeling that a lot of the future is being discounted. But we don't know what the future is, 2-3 years out, right? I feel defense is not just an India, it's actually a global structural theme,
Yeah.
right?
Unfortunately so, but yes.
Unfortunately, fortunately, but it is a long-term structural theme. I think if Trump comes back, he's very clear. He's going to tell the Europeans to spend more on defense, and there are two wars which are going on simultaneously still, right? So I don't think that this is a short-term trade. Now, as I said, like in anything else, could that pack correct and go sideways for some time? It for surely can. But I think we have a long, long way to go. On real estate, we're still very bullish, right? I think we are in the early stages of what I think is a long-term cycle in real estate. And I'm more bullish on premium real estate than affordable real estate, right? Because the kind of wealth that has been created in the market is just astounding.
Yeah.
And I think the starting point was very attractive because, the funny thing is that such a large asset class, you don't have a single stock in the Nifty in real estate, right? So I think we have long, long way to go. The sector is fairly reformed. It is now consolidated. More importantly, the quality of capital that is now available to this industry is far better.
Yeah.
Yeah.
You have the big sovereign funds and the large institutions who are willing to fund the growth in this sector. And now the players are more reformed, they are more disciplined, they're focusing on cash flow, they are not trying to speculate on land and inventory. And I think their representation in the overall market cap is still very minuscule. And I think there is a lot of headroom for growth there.
But do you sense a lot of new players also getting listed, or do you think the chunk will remain, given the consolidation in the sector, which has already played out, is going to remain with the big daddies from within the premium segment?
So I think it's already
right now?
happening. I think we've seen a couple of new players list, right? Rustamji listed and a couple of others have listed. And I think now what's happening is that, for example, DLF was only focusing on the north, but now they're coming to Mumbai and Goa. Prestige was only in the south, but
It's
now
a big
Prestige
city
has come to
already,
Mumbai,
yeah.
right? So I think the markets are large and the players had become very limited, because a lot of the smaller unorganized developers were completely out of the picture. So I think there is enough of a room for organized, high quality developers to now starting to go and look beyond their normal geographies.
But what we talked about when it comes to defense and FMC and real estate, I beg your pardon, can be said about the rest of the market as well. I mean, it's not about identifying the right sectors where rotation is going to happen and those bottom-up stories, but it's also a function of the price that you pay for whatever you're buying.
Yes.
And there is nowhere that comfort in the entire market.
No, I agree with you. I mean, I think that investors from here on should not expect the kind of gains that we have seen in the last 4 or 5 years, right?
Yeah.
Because we came off such a low base in some of these defense and PSU names, which were like almost in single digits,
Across
early
the market,
double digits
yeah.
across the market,
Yeah.
right? So I think from here on, returns will be more moderate, right? But I still believe that they will lead the market. And they will not lag the market over a long run. I'm not talking next 6 months,
Sure.
but if you take the next 2, 3, 4, 5 years, I think these sectors will still continue to lead.
But that reminds me of another Sholay dialogue. Jo dar gaya, wo so mar gaya.
mar gaya,
Is
yeah.
that the case right now in the markets? Because you're feeling that FOMO about booking profits, but then the markets rally further and you feel like a retard that you haven't put in more money perhaps, or you took it off too early. How do you kind of marry the two dichotomies? I mean, do you stay put, or what's the way? I mean, book something off the table?
See, I think, booking profits and then doing what with that money,
exactly.
right?
Wait for a correction, which you've been waiting for a while, because, I mean, if you talk to the technical experts, they're talking about a 1,000-point dip, which is expected somewhere in the next 2 months, and you're sitting tight on your cash, hoping for that dip. But the next time you see Nifty is past 25,000,
See,
perhaps.
I think one of my experiences of participating in the 2002-3 to 2007-8 bull market, was that don't try to be cute and preempt a correction, right? To answer your analogy, don't get off the horse, right? The horse may not gallop, it may trot. That's fine, but don't get off the horse.
Okay, I don't have any more Sholay dialogues, but we'll have to really Google that. But other than that, Hiren, if at all you were to put fresh money to work, right? Because one key factor is that whatever you've done in the last 1 year or 1.5 years, it's all been local money. The FIs are just about getting to come back. I don't know if they will, if valuations are a concern, US elections, a lot of other unknowns for us. But assuming that they are waiting on the sidelines to come back to India because we are one of the best world markets, what happens in that case? You got to add more, right? And do you buy more of the same then?
Yeah, so I think, obviously they do believe that the valuations are expensive, and they are also, like everybody else, waiting for a deep correction to come in. And I think that, their challenge is that if you really see that a lot of the market cap growth that we have seen in the cyclical sectors are in a much more smaller cap universe, and it's very difficult for them to get liquidity in those kind of stocks, right? So they haven't really participated in that era, though they could, for example, they could do real estate, because there you have a couple of companies like DLF and Macrotech, which are large cap. So I think the way they will enter is that when there is fresh issuance of equity or there are new IPOs that happen, you see the kind of selling that the PEs are doing across the board in many businesses, right? That would give them a good entry point to kind of come into the market. I think from, do you buy more of the same? I think there are other sectors, I think, which are also promising. I think pharma could be a very interesting bet. Even selectively consumption, to my mind, because that hasn't done so well. And again, you have to be very selective there, right? But you could find some good opportunities. I think the whole, maybe chemicals and agrochemicals is another area. But you can't deploy very large amounts of capital there. So I still feel that, the idea from here on is to keep a slightly more balanced portfolio. and you will find one-off opportunities, bottom-up opportunities. I think there are still there in this market. But yeah, I mean, I do agree that we're not going to see the kind of re-rating that we've seen in the last 4 years. So we've been telling clients that, yes, we are very bullish on the markets. Don't try to, time it or try to book profits and come back in, but have more reasonable expectations of returns going forward from here. And you'll always find something in the market, like, we saw how the tech moved, right?
Yeah.
So, and before that, tech didn't do anything for 6 months. So you'll always get these opportunities where sectors go into consolidation, correction, and you will get hopefully a good entry
So play
point.
tactically, largely be invested throughout.
I think so.
But you know what, in our last 15-20 minute conversation, it's surprising that we have not talked about financials, which is the biggest weight in town, and that tells you the nature of the market right now, that nobody's talking about it. Do you think it's going to be a similar story as IT, that they might not be doing anything for the current 6 months, but then they'll re-rate? Is that something which is a possibility, or they are in a bit of a long drawn sideways move for now?
So again, as I said, in any bull market, you will have sector rotation. So they will have their time under the sun at some point in time. But am I very bullish on large cap private banks leading this bull market? The answer is no. I think they were leaders of the previous bull market. People have been kept on harping that, this is an area which is cheap and there is value, and but it has continued to underperform, right? I just feel that very seldom do leaders of the previous cycle lead in the next cycle. And I think the problem with the private banks was that there was over ownership. And I think I was surprised when in 22-23, when you had the best of all worlds for the banks, right? The fastest credit growth, you had no credit costs, very low credit costs, and you had the best NIMs. And despite that, the banks didn't do anything great, right? So I think the market has a message there. So I'm not saying that they won't compound, but I don't think that it's going to be a very exciting story, the private banks, I think. I mean, you can find a few odd opportunities here and there. I think the story in this cycle has moved from B to C lenders away and gone to more B2B lenders, right? Because the B2B lenders in the previous cycle, nobody wanted to touch it.
Yeah.
Power financiers, nobody wanted, I mean, anybody who lent to infrastructure or power just went kaput, right?
True.
And now it's just behavior that even the banks don't want to lend. They want to lend to consumers. But unfortunately, consumer lending has compounded at a very fast clip, and the RBI doesn't like it. They don't want another bubble there. And now you finally see, I think today HDFC Bank said that my advances growth will trail deposits growth. And the problem is that there is a fight for deposits. So if you don't have growth, so I think for the big banks, the classic thing is that if you grow too fast, your margins will go down. And if you want to protect your margins, you'll have to sacrifice growth, right? So I think you still, despite all of that, these are high quality companies, so you will have moderate compounding, but I don't think that they can lead this bull market.
So who's going to lead other than defense and realty that we've talked about within the large cap universe?
No, I think the entire cyclical pack, as you would call it, right? Manufacturing, defense, power. I still think power is a big theme. The equipment guys, the generators, that entire ecosystem, transmission, right? Real estate. So I think all sectors that didn't do well between 2010 and 2020 are more likely to do well. And I think your consumer and private banks, which actually led the previous rally, are probably going to be laggards, right? So I think this is not the day and era of the Asian paints and this thing, but it's a very different context in this cycle. That's what we believe.
Okay, different context of the cycle, but nonetheless, the bull cycle is intact, and that's the big headline right now. Thanks, Hiren.
Basanti
Thank
will
you so
dance
much.
for a while.
Hopefully, yes, and the bulls would be liking. Thanks so much for dropping by. Always a
Thank
pleasure
you.
speaking
Thank
with you.
you.
Thank you so much.
If you like this video, then like, share and subscribe to ET Now.